We've just seen a TD10 reading happening here on stock markets around the world. And of course, it's led by the Qs and technology. Nvidia is in a massive gamma squeeze, as are a few other stocks. And with things like Google and Amazon reaching our targets over the last 24 hours, we've got a lot to discuss. The question now becomes, what is going to happen next? Will we see a switch in the breadth showing us that the markets are really in full rotation? Or are tech going to go bad? Well, let's take a look at the options together right now, because we've seen a lot of squeeze in the last 24 hours. We also know trillions of dollars expire tomorrow, and we're quite far away from where technically the max pain is. Well, welcome back everyone to the Daily Show, where we talk about markets around the world. We'll start off here with some charts, because I think charts and options really are the most important part of what's happened over the last 24 hours and what is most likely going to occur over the next 24 hours. We also have the Fed Chair Powell coming out to tell us what's going on. So first up, the skew. This is one of the four reasons that we're looking at markets, and we're using this as a bit of a contrarian indicator. Basically, the skew can show us black swans are coming or people are concerned about that. In recent videos, we talked about the Dow Transportation Index and the Dow itself being down for 5 days straight, and that only happened 2 other times. And in both of those times, we saw a squeeze on the market. One that was 9% in 2020 before the big fall, and the other one that was about 2.6% before the big fall in 2011. Well, it's interesting that we find ourselves here at a squeeze event again, but we can't actually be sure that it's over until we see skew actually turn around. That is one of the reasons that we'd be looking for. We saw it back in April of 2022. We saw it in August of 2022. We saw compression and the skew getting crushed. We will be watching this over the next couple of days. So let's talk about this. It is the NASDAQ breaching all of these highs. And of course, people will not be happy about this one unless you're on the right side. Stocks like Google hit critical highs over the last 24 hours. In fact, they hit our targets. And Amazon is well on the way. You're talking about a matter of dollars, if not already hitting into a trim level. There were some that were behind, but it was the day of semiconductors. Basically, Nvidia rallied the market super heavily and went into a full-on squeeze. PLTR also went onto a full-on squeeze, which has been rumbling for a couple of days now. And we're bringing in something new to this show, which will be following unusual options volume. So you guys can actually see how we can use that along with technical analysis to make better decisions. So for now, we've got a TD10, a pretty rare event. Basically, the sequential is looking very, very bullish here on the weekly, but these are things that put in tops. If we got to a TD13, then we'd be in serious trouble. That would basically usually mark the top of a market. You can see here the run that's been going on the NASDAQ, and I've certainly cautioned the NASDAQ since we breached through this zone here. It's just been unfortunately bullish up until this area, and now we're breaking out to unknown quantities of where it could go next. I have a suspicion that we're seeing what we call a blow off top, and I've seen it plenty of times before, but calling it before it occurs is difficult. Let's have a look at some of the other things that we've seen. Of course, we've had a weakness here in high yield junk bonds. They're totally disagreeing with the market. These differentials can stay for a while, though usually the bonds market will be correct over the middle term. And I think it brings up a big point. If you're trying to trade this market right now on the short side with futures or CFDs, incredibly difficult. Obviously, I mentioned this a few weeks ago. I am kind of bearish here in the mid into August and September in the S&P. 4150 was a strike that I took. Obviously, I've taken lower strikes, but it's based on puts. And I've gone for a 4-month and 6-month kind of variable there with spreads. Now, it's all about ratio. It's all about having the time. But if you take a look here, this S&P versus HYG, you can see they're getting very, very big in terms of the differential. Not much action on junk bonds over the last 24 hours while the S&P broke to a new high. Is it a Wyckoff UTAD? Well, we'll find out. And of course, we don't want to predict that one at this stage. It's always been nimble. It's always been fast in this trade range. And trying to short the S&P here is still going to be tough until we see that turn as it could actually really breach out and go 4,300, 4,350 if we see another strong day on Friday. Let's talk about copper. Copper continues to be weak and it continues to hold up in this zone. Demand destruction's well in play. The two types of markets. We mentioned yesterday silver and gold. They were getting crushed over the last 24 hours in comparison to everything else. Then, of course, we've had metals, energy. They've been the best shorts, along with regional banks up until recently when we believed they were in a squeeze, which has continued over the last 24 hours. Let's have a look now at bonds markets. Bonds markets have made some recovery. This is corp bonds. So basically, corp bonds, inflation adjusted, made a new low. Usually, it's not a great sign that the market is going up and corp bonds are going down, but it's a middle term sign. It's not an instant thing. It's more of a movement. What about the whole central bank liquidity? Here we have the Fed. Here we have the central banks of the world in the purple line. And you can see the Fed's actually still injecting, even though they're claiming they're not. And they have been injecting over the last week. We've seen it go up. It could explain part of the reason why we're doing this, but I would say this is just to really freak people out and to push a huge gamma squeeze narrative that's unfortunately no doubt crushing many people out there. Let's move over here to the move versus the VIX. Now, this is a big differential. Again, the bond market volatility continues to be at that 94th percentile. And of course, Wall Street continue to be hedged into the debt ceiling and other problems out there. We're also getting another reading going on at the moment, which is strong dollar, which is this yellow-orange line up here, and then versus the S&P. So the dollar's going up and the S&P are going up. Now, we've seen some other signs of this in the past, but in general, when we see a big increase in the dollar, I've just kind of marked a few out here. Here's the big increase in the dollar. Obviously, you can see the increase. You can see where it started, what happened, and there is some correlation between strong dollar leading into weakness in markets. But again, timing is everything. We need to see the signs of turnaround. Very interested in what happens over the next 24 hours with Jerome Powell and others coming out. So let's take a look at the biggest options flow over the last 24 hours. And it was actually the biggest option amount was going through the SPY. Then we saw a huge amount of movement here in things like NVIDIA. Look at the total volume. It's 2.34 times the 90-day average, and it was a call attack. 1 million plus units of call volume going through. Obviously, that is creating a huge squeeze event, and we're seeing it, play out with that 5% day. It's not the first day that NVIDIA has shown big percentages, but yeah, this is something we will be following here, so you can check it out. 1.46 times the relative 90-day average in terms of Qs. Again, we're seeing an interesting point here. More puts injected into the market than calls. Yet, of course, because of the individual stocks underneath, you can see almost every one of them was in a full squeeze. Some notables that I've taken out of this was Palantir. This has been unusual now for a few days, and you could have seen it, of course, in options if you've been following it. Again, we'll make sure that we follow it here on the channel, but that's 7.18 times the average 90-day volume, and you can see the ratio here. Amount of calls going through versus puts is just obscene. So there could be still a little bit more on the top of those, though really with Palantir's move of being 14.5% off the back of many good days, that's a bit much. Amazon and a few others like Google are some of our favorites at the moment. They've continued to have unusually high volumes, but both Amazon and Google, they're starting to come back down to their 90-day averages. Still outweighed in calls. We're looking for the puts to come back in pretty hard here, and we just have not seen it just yet. So everything's in kind of a squeeze until it turns. TD10, though, is a big deal. Now, what else are we seeing which could be actually positive towards bears if you're in the market? 56% calls. This is up from 52% and up in general. Calls are outweighing puts in a pretty big way, and you can see the total options volume over the last 24 hours was massive. It happens like this into OPEX. Of course, we thought that maybe we might see some weakness in the SPY, some strength in the Qs. Yeah, that may not make sense, but that's what we thought we might see in the last 24 hours. And we just got basically strength in both. So now with Jerome Powell speaking today, will he turn it around? Take a look at retail trade percentages as well. You can see here single leg by trader type has really increased. Retail is 31%, small 17%, professional institutional. This was led. There's a lot of retailers in these particular moves, buying calls in a big way. Again, one of those things that you've got to look at and say, oh, okay, interesting. When we go over to some of the biggest options volumes across the board, you can can see them all here as well, just a different source. And you can see some of the big reads in the put call ratios, which are interesting. We've still got Tesla as a very interesting one being out in front. This is not an unusual amount, though, for it to be traded. And Tesla had a bit more lackluster. In terms of the notable options that are coming out at this stage, there are not any incredible notables. You can see all these expirations over the next 24 hours, though. Look at these PLTR puts. And I noticed that here in the volume, the 3 highest positions are actually all puts for the 19th. Interesting. All puts, big volumes coming in here, all the strikes that you can see. And obviously they're looking towards, no doubt, closing out on the day. But yeah, a lot of ODTE action. And this really shows you with these expiry dates that there's not too much large long-term stuff that's coming through here over the last 24 hours. It's all short-term. And yeah, something to be noted in these markets. We'll continue to do that as we move forward. So with the gamma squeeze on and markets continuing to really rip some of these stocks, what about the expectations of yields? Well, the Fed is still expected to potentially raise rates. Again, it's kind of counterintuitive, isn't it? Markets are getting absolutely ripped, yet the Fed is now 33% expected to realistically raise rates. That's up from 10%, according to economists, only a week ago. Are they wrong? Are they starting to get right and the market getting with it? Very interesting. I want to remind just again with silver seasonality, different markets, obviously, this is the ones that we're focusing on at the moment, the metals, the energy, the currencies such as, gold. And the way that currencies or hedges, some people say, I say it's a currency. And we're going into a period of weakness. And again, we did share some pretty big stats recently that showed that demand destruction was underway in the markets. You can see here only 31% of the time was silver positive after the next 2 months. There's some pretty big stats. I just want to reiterate that again. Now, during these times, there's no doubt it's really hard. If you've missed out or you feel like you've missed out, this is the time where we have to find, is there a rotation in the back end of the market? You might say, well, I missed tech, but there'll be others. Think back to 2020. Let's say we are in a new bull market. We should see breadth start to flow out of these big concentrated tech stocks and rotate into others. Otherwise, it is nothing but probably a false rally. And that's the big issue that you've got right now. You do need breadth switch. And I also want to remind people that there are some very cheap stocks still in the market, heavily depressed. And this is the tale of 2 or 3 markets right now. Forward PE is probably sitting around 19.5 at this stage. I will update it in the weekend video. And I just want to remember that 25-year average is 16.8. Investors, the hardest thing ever to do is to be patient and wait for right mounts. If you were patient and waited, sometimes, throughout 2022, you got 2 specific periods where forward PE got to a nice level. That's what investment is sometimes. To beat the market, you've got to be patient. Temperament is the key here. And I just want to reiterate that because I know it's not easy out there right now if you're not in some of these runs or you're looking at profit thinking, how dumb am I? Or you've taken a loss on a short and you're thinking, what the hell am I doing? Yeah, all of these things go through our minds. It's all about the selection. And that's why I've really been trying to go hard on this concept of, yes, metals, yes, energy. They've been the weak ones. Gold, obviously, showing the weakness. They've been the better markets to short. Unfortunately, shorting things like semis and tech will get in problems. I know everyone loves tech. Tech is not always the best place to look for, though, when you're talking about going short or long. At the moment, of course, long would have been the better click. Let's have a look at the last 24 hours. Semis, technology, communications, consumer discretionary, they were the best. The usual suspects, in fact, a lot of defensives doing the worst over the last 24 hours. That's not usually the rotational switch that you see before the market goes down. But, TD10, it's just something to keep in mind. But we will be looking very, very clearly at rotation now. We need to see that. Otherwise, these are out. Still, the best performer over the last 5 days has been regional banks, followed by semiconductors that broke out massively. One that we were looking at, MU, and semiconductors in general, they were breaching pretty hard over the last 24 hours. So it's pretty interesting to see all of that. But again, the tale of 2 things. Look at metals, look at energy. They're barely up through those sessions, even though the market has run through, and gold itself's down actually 5 over the period. It was so hot about 2 or 3 weeks ago, and now it's just become, the worst. So things can change very, very, very quickly. So just before we jump into the hottest charts and the key levels you need to be watching right now throughout the markets, I'd like to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you're from Australia, you might want to listen to this. If you're from somewhere else in the world, don't worry, there's a bunch of special offers down below. But we've managed to secure some additional Microsoft fractional shares if you fund your account with as little as 1 cent here, and as much as $1,500 over the first 7 days of deposit, and you get some additional $30 worth of Microsoft stock. But it doesn't really stop there. Why do we like this platform? Well, a lot of it has to do with the tale of two markets right now when it comes to what's just happened with this gamma squeeze in markets. Technology is very, very hard to short. We've been basically really talking about the risks here in technology over the last week, and the gamma has continued to be crushed here with massive calls coming in. You'll actually notice it is the tale of two markets. Certain things are down, while certain things such as regional banks, semiconductors, and interactive media services are some of the best sectors over the last couple of days. But it's not just there. If you come over to the concept, there's ones even better than that. This particular concept, OLED concept, AI concepts, they are the best 5-day returns. And while they may not be forever, you can see that it's definitely two types of markets. We've got gene editing, things like gold and other stuff actually down over the last 5 days. So if you're interested in being able to find rotation inside of the markets better, Tiger Brokers platform could be for you. Special offers down in the link in the description below. Okay, well, let's take a look now at the charts and we'll get into some of the hottest levels that we're looking at right now. We'll go through a few more indicators. VIX 1D, so low. So we knew that the Thursday would be a massive volatile day. It usually is before OPEX, which is the big $1 trillion option expiration. But basically, it didn't move the VIX 1D at all. Of course, on the upside, VIX doesn't tend to spike as much, and that's where we're at. Semiconductors broke out. Important here because if the NASDAQ is going to continue to run, it's probably going to need this sector to push it through. And the next target would be around 140. So a fairly large breakout here. It does look, significant. Obviously, it's been the big rotation of the last couple of days. And if it does keep going, 140 would be the line. We know that NVIDIA is an unstoppable machine right now. It has all the hallmarks of a blow-off coming soon. But yeah, I'm sure people rallying it, they'll be excited. You know how you'll know? It'll get crunched a lot in one day. But you've got to be careful because if you pick the wrong one, in fact, I'll use an example of this, which we've seen recently. Okay, ALF, for example. ALF Beauty. This thing is in a massive ramp. To go against such a ramp, you need to see significant sell-off. Now, we did see some sell-off over the last kind of 2 weeks. That's pretty good. It's not usually the crush that I'd want, but if you were going to pick anything throughout this that's maybe going to show it, it's probably this particular style of setup so far. Not quite there, not the perfect one, but when you see them and you start to replicate them, that's what you're looking for across the board. Let's now move over to KRE, which is, of course, the regional banks. They continued to move up. I'm still targeting a little bit higher for those. I'd like to see them into 41 or even 42 range, get back into this structure. They're in the squeeze, which is nice. They weren't up huge on the day. They're having a bit of a rest after their 7% day. But yeah, regional banks, obviously a risky play unless you have, the correct management under any of these real trades, actually. Dollar index continues to run. As we mentioned before, if the dollar's going up, historically, over the last couple of years, we've seen markets actually decline a fair bit after that. Now, the dollar is on the run. The weekly was an incredible close. We didn't get down to our nice big buy level. Euro traders would have been happy, though. There was a great trade on the euro versus US dollar. And we move up here to this big red box. I'm actually expecting the dollar to get there. I think that pullbacks will be met by buy demand into that red box. And then at this red box, I think big things are going to happen with the dollar. So waiting for that to kind of occur. Over on gold side, we got through the heavily traded zone, no switch, which is why you've got to be very, very cautious here of markets. You can see that red line there didn't quite get the switch on it. And therefore we didn't breach above that, activating any longs, and gold remains at this stage weak until we see an actual real turnaround. And the 2 hour, 15-minute stuff, they have not shown us that throughout. If we move over to GDX, you can see here on GDX, it's pretty much a double top. Same thing on silver, that steel high, the breach through, the totally tale of different markets. It was down on the session, which everything else was up on. And yeah, I mean, gold basically looking like it's going to continue to weaken for a little bit. Rallies probably met by sell at this stage over the next coming weeks and months. What about natural gas? Big breach out here, TD9 for this one. So pretty significant. Usually would see a turn around this point. So basically now that we've got the TD9, we've got a nice breach out of our beautiful low. We'd be looking for pullbacks to be met by buy demands. Actually, this area in here is pretty big deal. And it looks like, natural gas is kind of on the way of some recovery. Obviously, be careful of this one. It's called the Widowmaker for a reason. It smashes people with huge roll contract costs and upwards of 30% moves on the daily. Let's move over to the 2-hour here in terms of what we've got going on with oil. We did see weakness off our most traded zone. Not super significant weakness. We've come down to what you would call like a resistance becomes support area. I'm looking for that now to be breached lower and then that to push down to the 70 a barrel. So if you're in the day trade, you're probably waiting for it to actually get through and then pressure it down to 70 a barrel. And in terms of protection, you'd basically just want to be protected behind there if you were to short underneath that zone. So still in the downtrend, most traded zone, obviously want to see that keep going down. Just on top of that, we can go to XLE, which is the sector for energy. And you might notice here, it's kind of gone down to a level that is fair. I still think energy will be weak, but yeah, we'll just come up a little bit here. We'll have to keep watching this. We will report on it on the weekend once we see Friday's action. Now, for Tesla traders, are you happy? Probably not that happy. It's up 1.74%, but it's not up 5% like Nvidia. Yeah, it looks like it's trying to go towards the 180. We've seen a decent amount of options trade, though Tesla's been incredibly weak on options even though it's huge, compared to its normal 90-day volumes. And yeah, we're still seeing a decent amount of calls coming in and them starting to outstrip. Going towards 180, ideally for Tesla. And yeah, it's coming back up to hopefully get those gap fills that we've been talking about. Let's move over now to Amazon and what's going on here. Amazon, another nice session. In fact, outperforming everything but the Nvidia there and semis over the last 24 hours. So Google did 1.68, Microsoft 1.44, and Apple 1.37. So consumer discretionary or Amazon continues to ramp. It's hit into our green box. And anything in here is feasibly an area that you could TP. Though I think with Amazon, I've been kind of liking the idea of that 119 to 120 area and kind of hope it gets there. It's so damn close now. Yeah, it's been a pretty big move. And I guess what this does is I just want to reiterate, it shows you that there is another opportunity. You miss the Apple, and of course that's upsetting, but then suddenly we see consumer discretionary go. And even if you'd picked that up at the start of this week, like we saw that breakout, it's still 7.5%. Now, that's just one trade. I don't care. There'll be another one as well. There'll be another one as well. There'll be another one as well. There's always an opportunity in markets. I just know it's hard out there right now. What about Google? Interesting. Watch reaction here zone. For me, I'm done with it. Very nice. Great work, Google. Thank you very much. This was a breakout that we reported on the other day, and it's continued to go up, and it's hinted into this zone, descaled a bit. For me, it's done what I wanted to. Now, could there be more in Google? Yeah, sure, there could be. But up here in these highs with the TD10 on Qs, I'm cool with that. That's pretty nice. So yeah, that's the end for that one for me. Google is still a great investment. I'm sure it's going to do okay on the AI side. But yeah, that was a big squeeze run. The thing with this is basically a lot of the options are a little bit further off. So that's what's been forcing this Google into these daily moves that have been quite strong and quite pushy. Let's move over to the big one though. And we've got the lazy bear indicator here, which uses a bunch of Keltner and stuff. And it basically shows you that the squeeze is on. And you can see, yeah, well, it's clearly on. And it's hard to tell where you're going to stop it. Now, we've talked about watch reaction here. We didn't get any reaction, so what are you going to do? And then we move over to the weekly. It really puts it in perspective. To me, it reminds me a lot of this. And these are, very symptomatic. Look, I love the company, don't get me wrong. I just think it's in an almighty squeeze at this stage with the amount of options coming into it. These are generally, you've got to be very careful if you get involved in these ones. I saw a comment yesterday and they're like, yeah, there's one, I said there was 1% for the NASDAQ to get to that new high, which seemed like it was kind of going to try to do so over the next week. And someone's like, that's the easiest trade of my life. And what they're doing is they're recognizing that there's a very high probability because that level would just cause so much pain that it was going to happen. I saw that comment. And, here, do I get involved with this if I'm not already? I mean, personally, no, I wouldn't. I just think it's not a good risk reward and not worth it. Some people love getting involved in these things. We know that the options are massive, but this has that potential. This is an unusual week. If we look at the percentage, you've got 12% on the candle. Obviously, you've had that before, but when you start to ramp these 12%, if we get a crush, blow off, big smash down on NVIDIA, let's just say this, I wouldn't generally buy that dip because that would tell you that they have just absolutely caused the pain and they're now dumping. A big player would be dumping that position to other people at that stage. What about Apple? It's still all around this area. I've said many times that for me, I would trim this position. That's my own personal opinion. Obviously, you do with whatever the hell you want and you make your own decisions. But yeah, I still think it's the trim zone and I would always stick with that one. No sign of turnaround yet. We've been looking at this as a potential island with, of course, the gap up. And then we're looking for the gap down. We haven't had it. We haven't had anything. Apple is still one. We're still looking at it from a potential canary standpoint. Let's move over to the DAX. What's going on in the DAX? Well, the DAX has continued to rally and it's pushing through the highs. They do say sometimes don't try to short a dull market, and the market has been very dull on the DAX, and this is a big breakout on the side here. It seems more unlikely that this is a UTAD, which would be part of a Wyckoff distribution at this stage. I'm not touching it. It's continued to basically rally. We don't have the signs of short yet. There's nothing that we can really do if you're trying to short it. And if you're trying to long it, again, risk reward, is it worth it? Well, where's the next stop for the DAX? We're basically at these highs. So what you'd be looking for now is just for it to breach out past 16.3 and then somewhere around here, set alerts, come in as a day trader, and there can be very nice scalps around those super highs. So again, that kind of points towards maybe a little bit more in markets that could come through. Let's move over to the XJO. Now, obviously, I've been bashing this thing for a while. I've pretty much been hitting it up since Feb. We got a big sell-off, and then we came back to this level, and obviously here I was very, very short. And I still maintain there's most likely that's what's going on with the demand destruction of metals and other things that are in Australia. Remember, Australia is financials, energy, and metals, basically. So if we get continuous weakness in copper, that's going to be a problem. And I do think that this is an interesting point because not only is it a golden pocket, but it also could stand the double bottom side of things. Usually I'd like to see a bottom get stolen before it comes up. I'm open to both ends, but for now, I still maintain kind of my bearish status on the XJO. Let's move over to IWM. What's going on there? It broke out, but it isn't through the highs yet. This is probably going to tell us realistically, it's probably going to tell us breadth allocation. So Russell is going to be a big deal. This is that short zone we talked about. It's nowhere near as strong as the other day. We, of course, got it once, twice. Looked okay for part of the session and then came back through. If we breach this high, we're probably putting in a Wyckoff bottom, and that's going to show us that breadth is starting to actually spread throughout the market. And that's going to be a big deal. And believe me, there's going to be opportunity as we move now into what's probably going to be a very lackluster index position. We're having to go into individual stocks, and this is what's going to be the big thing. We see breaches up here. It's going to be a fairly big turn. Haven't seen it yet. Let's move over to the Qs. New high on the Qs. You can see here it absolutely just demolished them. We got a TD10 reading. That's pretty rare. We don't tend to see that too often. And although that, if it goes to TD13, it usually marks highs. So we'll be watching it. But could it run up to here? Oh my goodness. Imagine if that happened. That would probably mean that the S&P is about to breach heavy and it will go to 43.50 over that time. So yeah, I think that the tech stocks are running super hot. They're all in squeeze as far as I'm concerned. And we've got not only huge TDs on the weekly, but we've also got them on the daily. So it's all very significant. These moves are certainly extended, but as you know, if you've traded 2020 or you've traded even 2018, 19, sometimes they can get very extended. And the more they extend, the more you'll actually get towards, if you're sitting on the sidelines, the more you'll be able to then spot the turn when it does occur. Trying to pick the top in here is going to be very tough. There's a big difference between down here and once we breached out. And that's why, of course, we had to relinquish anything that was there at that point, except for multi-months. And of course, technology stocks, not really the best short in the markets, unfortunately, at this stage. Central bank liquidity, yeah, the Fed keeps doing something. I don't know why they keep doing this, but anyway, they're pushing liquidity in. That's annoying. Central bankers around the world are still tapering off, so it's a bit of a discrepancy between these two. But yeah, the US continues to pump in, even though they're not claiming they are. Now, if we look at a market like that from the US 500 standpoint, let's address two things. First up, we'll address the previous session. Now, of course, I was looking for it to gap fill, which it did, but it didn't do it pre-market. So, it didn't do it post-market. So it actually never gap filled the 41.67 till after the market happened. Got a little high, kind of like a little drop there pre. We rallied in. I wouldn't blame people for trying to short right there with a tight stop loss. Again, it's one of those trades that's like a 6 out of 10. You're going to win 2 to 1 ratio when you do it. And if you do it consistently at those types of levels, well, you'll win 6 out of 10 times at a 2 to 1 ratio type of thing. So it's worthwhile usually considering that type of trade. That being said, after that point was taken, no dice. You either go in the buy end or you sit out and chill and wait for the next opportunity. So yeah, that's where we find ourselves. Now, I saw a few people in our Discord room, which you can join, our public or private Discord room. They were talking about whether this is a UTAD and all part of a huge Wyckoff distribution. So you can make huge cases for that. Obviously, is this like a bias climax UT and this is a UTAD? Markets are very sneaky. We've talked about the 42.17, 42.30 area a few times, and how if we do end up breaching that zone, it really opens 4,300, 4,350, which would open the queues to go to those next levels, which a lot of people wouldn't be happy about. They're going to be driven by extreme options if they do. I have a suspicion based on the TD10. Again, it's probably unlikely, but this is an interesting day. We've got the Fed coming out, Jerome is coming, and we're sitting at a point that could be a UTAD with huge amounts of volume that went through the market in the last 24 hours. And it is a recipe for probably a VIX 1D, I would say, volatility spike. We'll find out whether it does. Let's have a look at Max Payne. Not working on this third week OPEX. Obviously, you only use it on third week OPEX weeks. Usually, you'd be going towards the more bear side over the next couple of days. But we've talked about it. 60% is the stat. Well, yeah, it's only a stat. Again, if you see the right signs over the Wednesday and Thursday for 20 years. Well, that didn't happen. Again, it is a stat. You have to use activation on it. 407 Max Payne. Yeah, are we going to reach that? Probably unlikely. 2.6 million units outstanding. Obviously, a huge amount of puts and a decent amount of calls coming in recently. If the market's going to sell, I guess it would, but really Jerome Powell's probably going to push it round. And with that stupid Fed liquidity coming in, it is very, very tough. So yeah, we say critical points a lot. This one probably does really dictate whether this market's going to a 4,300 or not, though, on the SPY. Let's move over to Bitcoin. Totally different market again. Now, we talked about the short there. It actually did short, so that was pretty sweet. And it came straight down and it got underneath our alert zone and then it's picked up a little bit. So what I might do is grab a little fib here and we'll take the fib from the high to the low, which is there. And you'll see it came back up to a pocket. Kind of would like to see this actually sell from this level here or do something like that. And that's okay as well to get reshorts. So it's a tale of a totally different market. Bitcoin looks pretty bad. Still could be alive here with a head and shoulders technique that's going to push us into 24,000. So yeah, at this stage, Bitcoin still looks weak, and something like, of course, stocks like Qs and stuff, well, they're in a massive squeeze. What can you do? Jerome Powell is coming here 11 a.m. Fed Chair Powell speaks New York time, so make sure to pay attention to that. If you're interested in finding out more about our channel, of course, you can do so by following the links in the description down below. 3 free treat sheets, Twitter, and obviously, of course, some of our other things as well. And I want to say a big thank you to watching this video. And if you enjoyed it, make sure to subscribe and smash that like button. Also, a reminder, the sponsor of today's video is Tiger Brokers. You can check them out in the description down below. Thanks so much, guys. Tough out there right now. Obviously, if you're trying to be a bear, I'm sure some people have lost positions over the last 24 hours as those things strike highs. And I guess if you're ever going to learn from the market, and one thing is you've just got to think about it as what type of instrument are you going to select? I often say, options are one of the best instrument selections because you don't really have a stop loss. You've got a risk, and time is your also on your side or potentially against you. So I'm not one for 1 day options generally unless I'm day trading them, but I do think options are one of the best vehicles in the markets when used correctly with the right risk management. Thanks so much. Bye for now.